Welcome to the Spot On Insurance Podcast, brought to you by Insurance Licensing Services of America, ILSA. This is Ted Tavares.
And this is Arlene Tavares coming to you from beautiful Puerto Rico. Today, we'll be taking a closer look at a topic that affects every single one of us.
But before we get started, don't forget to click on the subscribe button so you don't miss a single episode. And now here's our host, Doug Foresta.
Hello and welcome. This is Doug Foresta. My guest today is Bill Wilson. He is the founder of InsuranceCommentary.com, where he blogs about P&C insurance industry issues. The blog features coverage analysis and opinion. InsuranceCommentary.com was launched in January 2017 following Bill's retirement from the Independent Insurance Agents and Brokers of America, the Big I, and a career in insurance education and research that has spanned 6 decades. Bill Wilson, thank you so much for joining me today.
Good morning.
So I recently read your article, Missteps, in the December issue of IA Magazine, and I was especially intrigued by your first point, the insurance as commodity myth. And I know that this topic is being hotly debated in the industry right now. Wondering, first of all, if you can explain to our listeners what you mean by the insurance as commodity myth.
Well, it's a perception by consumers that all insurance is the same, specifically if we're talking about car insurance. It's a belief that if you buy liability, med pay, uninsured motorist, physical damage, that you're buying the identical same product from every carrier, and it's not true. The policies in the marketplace are different. The carrier's claim practices are different. So it's not a uniform commodity like you were buying a 5-pound bag of sugar or something like that.
So it reinforces this idea that everything is equal and we can make a comparison on insurance based on price alone. Would that be fair to say?
Yeah, and as an industry, we fostered that concept by the incessant advertising solely on the base of price. When you see most of the television advertising from the industry, it's all about price. And when you only talk about price, consumers tend to think that's the only difference between the products that you're selling.
So what then can carriers do? I mean, given that is an issue, what can carriers do to help refocus the attention on insuring consumers?
Well, I think the best thing they can do is it's tough to compete with multi-billion-dollar price advertising, but there are a lot of carriers that do not compete exclusively on price. And I think what they can do is focus their marketing and advertising on the superior products that they sell and their use of independent agents and their claims practices. And we've seen some of that with some of the Liberty Mutual commercials, some Farmers commercials, of the Allstate Mayhem guy, where they focus on coverage and the importance of coverage and not price.
I'm wondering if you can think of an example. I don't know if there are any examples that come to mind of carriers that are really doing this well.
Well, Farmers, they do. I think their slogan is "We know a thing or two because we've seen a thing or two," and they have these little vignettes of claims experiences where they paid a claim that maybe some other carriers would not have paid. So that kind of thing, that focus on coverage and avoiding catastrophic loss is what's needed to combat the price-based advertising. Got
it. That makes a lot of sense. How about regulators? I mean, what can regulators do to help refocus the attention on insuring consumers?
Insurance departments can do their part by properly vetting the coverage forms that companies file with them. Over the years, I've seen increasingly a reduction in coverage in particularly in auto policies and to a little bit lesser extent in homeowners policies. So the best thing the regulators can do is make sure that the products that are in the marketplace are not deficient from a coverage standpoint.
Got it. Yeah, that makes sense because I remember we've talked about this before, but the idea that what something costs doesn't always tell you what your coverage is, correct?
Exactly. Yeah, there are companies that'll advertise that they're cheaper than somebody else. They may be. It's often by very little, and the coverage may be substantially less than the premium would indicate. So the premium, the price tells you absolutely nothing about the quality of coverage. You need to rely on an agent that knows what those products are and knows which one is the right one for you, because the policies can be customized by endorsement, and you may need something that the guy next door doesn't need.
And that brings us to the question of what can producers and agents do to help refocus the attention on insuring consumers? With so much emphasis on price, what can agents do to help consumers realize that true value of customer service and expertise?
Most agents don't do a whole lot of advertising, at least local advertising. Mm-hmm. And what they can do is talk to their customers, try to educate them. That's the problem here is ignorance, and I don't use that in a negative way. I just mean that people don't understand. When my son was young, if I had let him, he would live on a diet of chicken nuggets and candy. But now he knows that that's bad for him. Right. We have to let customers know that just shopping on price is bad for you. And even though you may not like the process, it may take longer than what you would like. You have to sit down and examine what somebody's exposures are and find the right product for them. Don't rely so much on your comparative rating system in the office that simply gives you a list of companies and premiums.
And where does that education take place? I mean, it's when a consumer comes in? Can you say a little bit about where you would see that or how you would see that happening?
Well, I know an agent named Tim Wall. He's in Missouri, and he has customers come to him all the time. It's usually in commercial lines, and they're looking for him to save them some money. He says invariably that when they leave, they have better coverage and they're paying more than when they came in, but they understand why they have better coverage and why it costs a little bit more. So it's simply a matter of education when they approach you, but I'm trying to save money on insurance. Well, the first thing, let's save you from financial ruin, and then we will price it as best as we possibly can.
And you and I have been chatting earlier, and one of the things you've talked about is this idea that there's a bottom line to price cutting, right? And at some point, if you're price cutting, at some point there's no point left to go except to cut coverage. And you had the example of a tree service. I was wondering if you could share that with our listeners.
Yeah, I had a tree service. We had a tornado at my home, and didn't have a lot of damage to the home, but I had a lot of damage to I lost 19 trees in my yard. And tree services showed up to give me bids on taking these 80-foot cedar trees down and grinding the stumps and all that. And one of the bidders was a guy who had a policy that he allowed me to look at the policy form and endorsements that he had. And they basically, long story short, they excluded everything he was doing. He had a good general liability policy, but it was attached to it were 42 endorsements, some of which were exclusionary, and 2 in particular, for all practical purposes, removed any coverage he had while he was taking down those trees. So he was looking at price. He had a policy that was $700 that probably should have been more like $7,000. And he was getting what he paid for, which in this case was absolutely nothing. And that's what happens when people compete on price. The carriers will do everything they can to get that price as low as possible. And the way to do that, once you're operating as efficiently as you can, is reduce the coverage. And that's what happened. And
that's a great example of an opportunity to educate him. And I'm sure that he was happy to be paying more money and to get the coverage than to not pay the money and not get the coverage, I would imagine.
Yeah, I mean, I made it pretty clear to him that he had absolutely no coverage for what he was doing, and he needed to go back to the surplus lines account, go back to the broker and the carrier. And I told him if he wanted me to go with him, I would do it.
Spot on Insurance is sponsored by ILSA, Insurance Licensing Services of America, America's premier insurance licensing experts. To learn more about ILSA and the services they provide, visit ilsainc.com. I'm wondering if you can think of any examples, whether it's for yourself or perhaps an agent that you might know, an example of a time where that education really paid off for a consumer, explaining to them that, yes, you might pay a little bit more, but you're going to get the coverage that keeps you protected in the long run. I'm wondering if you have any examples that you could share with us about that.
Well, I've seen it it's hard to identify a particular example. I've just seen little examples of this for the last 28 years. I have spent my time helping agents, particularly at claim time, when there's a claim and there's an initial claim denial, and the agent feels that the carrier's interpretation isn't correct, or there's an equal or better interpretation of the same provision. And I see agents, I've seen them for 28 years fighting on behalf of their customer to get claims paid because of little nuances in the policy. Again, they're not commodities. There are all kinds of gray areas in policies. And it's often at claim time that people learn that lesson. And for better or worse, probably for better, claims don't happen that often, so that opportunity doesn't arise as often as we would like. So you try to educate them before the claim time by giving them examples of, you can compare policies. Like, if this happened, this policy would cover it and this policy wouldn't, so you can see why this costs $50 more.
Well, you and I had been chatting about this before as well, but it really underscores the importance of the need for, I know you've written about this, that, the people have talked about the death of the insurance agent for years and years, but this really underscores the importance of the need for an insurance agent.
The so-called disruptors that are coming, the startups that are hitting the industry, they're all talking about fast, easy, and cheap. That's pretty much their mantra, about having a phone app to get a policy in 2 or 3 minutes, that kind of thing. None of them that I've seen are talking about the coverage. They're not talking about the fact that you can't get a quote on your exposures to loss in 2 or 3 minutes. If I don't choose a doctor by how fast he can get me in or out. I know that he's going to do a diagnosis of what problems I may have, and I'll stay there for an hour or 2 hours if I need to get a good diagnosis. And the same thing applies to insurance. It's not your physical health, it's your financial health that the agent is trying to help you protect.
So that leads me to my next question, which is on the consumer side. What can consumers do to educate themselves about what's really in their coverage?
That's probably the toughest part, because there's so much bad information. People rely today quite a bit on the internet for information, and we all know, I hope, that there is fake news out there, bad information. I see it all the time. So it's tough for them to educate themselves, but they have the actual policy forms. You really need to take the time, however painful it may be, and just kind of peruse through your policies and see what questions come to mind, and then contact your agent. If you're thinking about buying a boat, look through your policy, see if there's any coverage there, call your agent and see what you need to do.
And then I'm curious about your thoughts about, particularly for the younger generation who is so comfortable looking at a screen and may not be as interested in building that one-on-one relationship with an agent. What would you have to say to them? I mean, does it come down to, pick up the phone and talk to your agent, or is it something else? Can you say more about that?
To some extent, I have a millennial son, and hopefully I've trained him. He understands the difference, and in fact, he's buying a condo right now and dealing with the agency that we've been with for many years. And I've explained all this to him. I can do that one-on-one, but I can't explain it to every millennial out there. Again, they're being force-fed all of this commodity-based price shopping advertising, and they think it's all the same. So that's the message that every agent in the marketplace has to get to their customers, either one-on-one or through customer newsletters, their website, or whatever, and keep telling the story over and over and over. And I think millennials will get it, but we just have to get the message to them.
Well, thank you. And then if people want to learn more about you and they want to check out your website, how can they do that?
Just go to insurancecommentary.com. I blog regularly, anywhere from 1 to 3 or 4 blog posts a week. So you can sign up for free. All you have to provide is an email address, and I will keep telling this story.
Bill Wilson, thank you so much for joining me today.
Thanks, Doug.
When you get a chance, go to our show notes and click the link to rate and review our podcast. We greatly appreciate it.
Thank you so much for joining us. And don't forget, we'll be answering your podcast questions every Friday live on Facebook at 11 a.m. Eastern.